Okay, Sean, we are going to go live now.
Okay, great. Good afternoon and welcome everyone to our electronic audit committee meeting. I'm Sean Strickland, chair of the audit committee, and due to the COVID-19 pandemic, we are practicing physical distancing, and all the councilors who are members of this committee are participating electronically and remotely. Councilors, you understand, and we've done this drill many times, that if you have a question, raise your hand. If you're not speaking, please keep your mic on mute. We don't have any delegations today, so we don't need to provide instructions therein. Let's get it rolling. Stevie's going to do the roll call. Thanks, Stevie.
Chair Strickland.
Here.
Councillor Clark.
Here.
Councillor Galloway.
Here.
Councillor Jowett.
Here.
Regional Chair Redmond.
Present.
All members are present.
Great, thank you very much. Any declarations of pecuniary interest? Seeing none. Okay, reports. Appointment of external auditor for 2021. Mr. Dyer.
Thank you, Mr. Chair. So the first report today is a recommendation from staff to appoint KPMG as the auditor for the 2021 fiscal year, with an option to extend for 2 additional terms. And the very brief background here is that KPMG has been the region's auditor for 5 years. Prior to that, Deloitte was the region's auditor, which I believe lasted a period of approximately 20 years. So it was a fairly significant change when we made it, 5 years ago. Normally, we would go out for a request for proposals process this year. Staff, though, are recommending the appointment for the 2021 year and for the option to extend. And that's for a couple of reasons. I think the first is partly related to, I would say, to staff being involved in a number of projects right now that we're looking to complete over the course of this year, looking to put, I guess, staff resources to the most or highest value add opportunities. I think the region has developed an excellent working relationship with KPMG over the last few years. We've been able to complete both this past audit and the previous audit working 100% remotely with our auditors. And I think they've been extremely responsive to the change in the environment that we've been working in over the last few years. We've also been working and continue to work with KPMG on a number of different, let's call them process and internal service improvements. And so with the relationship that the region has with KPMG and the circumstances that we find ourselves in right now as we hopefully continue on with the post-COVID recovery, we recommend continuation for the 1 year period. Next year puts us into a bit of an awkward situation where, so there's an election next fall. Council will look to this audit committee to make a recommendation for the auditor for the 2022 fiscal year. But for now, we recommend the 1 year extension. And recognizing the uniqueness of the relationship between the auditor and the region, the wording is very different in the recommendation that an extension would require the explicit approval of audit committee and regional council. This committee needs to be 100% comfortable with the auditor that you engaged. And so we would look to bring a recommendation back next year, assuming approval of this recommendation. We come back with a recommendation for each of the next 2 fiscal years.
Okay, thanks. Very good explanation. I'm fine with the recommendation. Do we have a mover or seconder? Councillor Clark, Councillor Galloway, any further questions? Call the question then. All those in favor, please do so by using your signal, your sign there, your green check mark. Great, thank you very much. That's carried unanimously. Thank you, Craig. Okay, the next one is on the sinking fund, I believe.
Yes, it is, Mr. Chair. So this is a response to a question, I believe it was from Councillor Galloway, when Audit Committee last met back in April with respect to the sinking fund surplus. And I think, if I recall the conversation, the request was for information about what does it mean to have a surplus, and what, if anything, does the region need to do about this surplus? And so I hope the report is relatively self-explanatory. Sinking funds are used quite commonly by municipalities, especially by municipalities that issue significant amounts of debt. So the table at the bottom of page 9 of your agenda shows that we have 5 sinking fund issues out there right now, totaling about $233 million. The key feature of a sinking fund is that the region makes an annual contribution into basically a pool of money into the sinking fund. That sinking fund earns interest, and because a sinking fund retires all in one shot at the end of the term, we basically raise a pool of funds over the life of the bond that's sufficient to retire it upon maturity. And the fact that we have a sinking fund simply means that the rate of return that we've been able to earn over the years is greater than the rate that was assumed in calculating the contributions in the first place. Our challenge right now is we're actually not achieving the planned rate of return in certain circumstances. So for example, for I'll call them the LRT issues, the 30-year bonds that we issued back in 2013 and 2014, we assumed we would be able to earn on average 3.25% and 3.5%. We're actually not making that level of return right now based on what's available within our investment policy. And so our expectation right now is that some amount of that surplus will be drawn down over the next several years. And because the most of the sinking funds that we have won't mature for another 11 or 12 or 22 or 23 years, there's really no action that's required at this point. It's a great position for us to be in. We have surplus available in the event that we're not able to meet the estimated rate of return over the next little while. And so our recommendation is that there is no action to take at this point. We'll continue to report back on an annual basis. And I would suggest it's something that council should probably take a look at, but probably not until after the 2032 and 2033 maturities happen. At that point, there'd be $100 million left, and that would be an ideal time to take stock of the surplus and see if any changes might be needed over the remaining 10 or 12 years of the LRT debt. Be happy to answer any questions, Mr. Chair.
Thank you very much, Craig, for that refresher on the sinking fund. I remember Councillor Galloway and I were actually on the finance committee when we established the sinking fund. I don't know, 20 years ago, Tom, maybe it was, or something. So thanks for that reminder and that update on how it works, the bullet payments, all that. It is for information only, so questions or clarification. Councillor Galloway.
Thanks, Sean. And thanks, Craig and staff, for the report. The first question I have is, remind me again why it's advantageous on some occasions to take a debenture that is structured this way. And then there are other occasions where we retire the debt as we go along. Is it just where the market's at and what we can get out of the market, and we're taking a chance on what we can earn on putting the money away ourselves versus the interest rate that the bond is charging?
Yeah, so a very good question. I would say the answer is mostly to do with investor preference and the value of the debt that's being issued. So for example, anytime you go longer than 20 years, it's extremely difficult to sell what we call a serial or an installment debenture where some of the principal is maturing every year. The longest we've been able to go is 20 years for that type of debenture. So if you're looking for something that's amortized over a 25 or a 30-year period, a sinking fund will be much, you'll be able to access a broader set of investors when you're beyond a 20-year term. And they're basically looking for sinking fund product. Would be extremely difficult. I think our fiscal agents would say be extremely challenging to sell an installment venture beyond 20 years. And then the other factor is the order of magnitude. So when we issue, for example, $95 million, that the third of the 5 issues in that table at the bottom of page 9, $95 million sinking fund, at that order of magnitude, 20-year issue, that would be an extremely challenging amount to issue at one point for an installment issue. So we had no trouble back at the time selling that $95 million investment because, again, at that order of magnitude, there's just more buyers who are interested in the product. So we basically tailor our issues based on the term and the size. And that, to a great extent, determines whether we go the installment route or the sinking fund route.
Thanks for that, Craig. So what is the, I guess, call it the actuarial surplus in the fund at this point?
Yep. So the surplus in the fund as of December 31st was approximately $2.7 million.
So and I'm not recommending this, but the option would be to reduce our annual contribution to the sinking fund and take us out of a surplus situation. And then if we found ourselves in a deficit situation someday in the future, we'd have to increase the annual contributions.
That's correct. The Act is quite explicit that should you have a shortfall or a deficit in your sinking fund, the answer is to remedy that deficit. And so that's exactly the situation we'd like to avoid.
Right. So is there any wisdom to redeploy that surplus in some manner that still, like for instance, there may be from time to time projects that have a cost benefit to it. Let's say a capital program, such as some co-generated energy program or something of that order. Would it make any sense to redeploy the 2.7 into such projects and pay the fund back with the savings? Do you know what I'm saying?
I do know what you're saying, and through you, Mr. Chair, I think the answer is there is no provision in the Act to redeploy a surplus.
Oh, okay.
What you're allowed to do is reduce future contributions in order to bring that surplus down. But I don't believe that there is anything in the Act that would allow a municipality to take the surplus out of the sinking fund and use it for another purpose.
Even if it was revenue generating?
Even if it was revenue generating.
Right, okay. All right, thanks very much.
All right, thanks, Tom. I don't think there's any further questions on this.
We'll revisit the 2033.
That would be quite appropriate at that time. Absolutely.
Have fun at that meeting, Tom.
Yeah.
Craig, I'm just wondering, of that 233 million, the sinking fund, is that all regional issued debt or some of that are partner municipalities?
Yeah, really good question. It's now all regional debt. For some time we'd issued sinking fund debt some time ago for one of the school boards. That expired, I believe, last year or the year before. So everything that's left is just for the region. And
Okay.
in terms of projects, the two $50 million issues were for LRT. The $95 million issue, if I recall correctly, was partly for the Kitchener wastewater treatment plant and partly for the GRT facility at Strasbourg Road.
Okay, thanks. All right, no further questions. Correspondence, none. Other business, I just had a question. Scheduling, I have committee of the whole meeting tomorrow in my calendar and also next week on the 22nd. Which one's real or both?
Well,
Oh, tomorrow's the budget meeting. Right. Okay. And then the following week is the committee of the whole. Committee of the whole budget. Okay. All right. That's all I had for other business. Anything else, other business? Motion to adjourn. Councillor Clark. Councillor Jowett. All those in favor? That's unanimous. All right. Thanks, everyone. Take care. See you tomorrow.
Thanks, John. Thanks, everybody.
I know.
Thank you.